You've been told a story about money. It probably sounds something like this. Go to school, land a good job, save 10% of every paycheck, budget every penny, and then one day, you'll be free. You've followed that story. You've done everything you were told to do. You budget, you save, you even cut back on the lattes. But when you check your bank account, it's still stuck. And that feeling of financial freedom feels more like a fantasy than a future reality. You're frustrated, and you have every right to be. Why? Because you've been playing with the wrong rulebook. The wealthy, the truly free, don't just earn more. They understand a set of secret psychological principles about money that are never taught in school. They don't just play the game better. They play a different game entirely. Today, I'm sharing the 7 most important rules from their hidden playbook. These aren't about complicated stock market theories or finding the next crypto moonshot. They are fundamental shifts in how you think. They are the psychological keys that unlock the doors to real, lasting wealth. And by the time we're done here, you will have them. Rule number 1. Redefine wealth as time, not money. The first and most important secret is a complete redefinition of the goal itself. Society teaches us that wealth is a number in a bank account. It's a luxury car, a big house, a flashy watch. We're taught to chase a high income. But the wealthy chase something else entirely: control over their time. Morgan Housel, in his phenomenal book, The Psychology of Money, says it best: the ability to do what you want, when you want, with who you want, for as long as you want, is priceless. It is the highest dividend money pays. That is the real prize. Not $1 billion, but the absolute freedom to wake up and say, I can do whatever I want today. Think about it. What good is a 6-figure salary if you're chained to a desk for 60 hours a week, completely stressed out and too exhausted to enjoy it? What good are expensive toys if you have no time to use them or share them with the people you love? The average person trades their time for money. The wealthy use their money to buy back their time. This is a profound psychological shift. Instead of asking, how can I make more money? They ask, how can I structure my life so I need to trade as little of my time as possible? This one change impacts every financial decision you make. You stop buying things to impress people you don't even know and start building systems that generate income while you sleep. You stop looking for just a higher salary and start looking for opportunities that offer flexibility and ownership. You begin to see your savings not just as a pile of cash, but as a countdown clock to your freedom. Every dollar you save is another minute of your future life that you own outright. The real status symbol isn't the car you drive, it's the empty, unscheduled hours in your calendar. That's the new definition of rich. Rule number 2. Stop just saving. Start acquiring now. This one might sound like heresy. Stop saving? Are you crazy? Hear me out. Of course you need savings. An emergency fund isn't just a good idea. It's a non-negotiable buffer that protects you from life's inevitable curveballs. But the conventional advice to just save your way to wealth is a trap. It's a recipe for a long, slow, and ultimately frustrating journey. Why? 2 words: quiet thieves. The first is inflation. Cash sitting in your savings account is like an ice cube on a warm day. It's constantly melting. If your money isn't growing at a rate faster than inflation, you are quietly getting poorer every single year. The wealthy understand this. They know that $1 saved is $1 losing its purchasing power. So, while most people focus on saving, the rich focus on acquiring. What do they acquire? Assets. An asset is anything that puts money in your pocket. A liability is anything that takes money out of your pocket. It's a simple distinction, famously taught by Robert Kiyosaki, that is tragically absent from most of our educations. An asset could be a piece of a business that generates profit, a rental property that provides cash flow, or dividend-paying stocks that send you checks. These are the golden geese that lay the golden eggs. A liability is the fancy car with a high monthly payment, the designer clothes on a credit card, or the boat that needs constant maintenance. These things just drain your resources. The average person gets a paycheck, pays their bills, buys liabilities to feel rich, and then tries to save whatever is left over. The wealthy person gets their income, immediately acquires assets, and then lives off what's left. It's a complete reversal of cash flow. Their primary focus isn't on how much they save, but on how many income-producing assets they can acquire. They are building a financial army that works for them 24/7, so that one day, they don't have to. Don't just save your money. Put it to work. Command it to go out and capture more resources for you. That is the path to real financial independence. Rule number 3. Master the art of being wealthy versus looking rich. There is a Grand Canyon-sized difference between being wealthy and looking rich. This is one of the most deceptive psychological traps in modern society. Looking rich is about consumption. It's a performance, signaling status through visible markers like luxury cars, designer logos, and extravagant vacations plastered all over social media. It's an external show. Being wealthy is the opposite. It's often invisible. Wealth is the money you haven't spent. It's the unspent income that has been converted into assets, stocks, bonds, real estate, businesses that are quietly compounding in the background. Wealth is financial security, flexibility, and freedom. It's an internal state of being. Many people who look rich are, in reality, one paycheck away from disaster. They have a high income, but it flows out just as quickly to service the debt on their high-consumption lifestyle. Conversely, many truly wealthy individuals are unrecognizable. Think of the classic story of the unassuming millionaire next door who drives a 10-year-old car and lives in a modest house. They chose not to consume their wealth, but to grow it. They prioritized the feeling of security over the appearance of success. This rule is all about mastering your own ego. It's about understanding that when you use money to buy a flashy object, the admiration you receive is rarely for you. People are admiring the object and just imagining themselves with it. You become a temporary mannequin for the product. True respect can't be bought. The secret is to delay gratification and find validation from within, not from the approval of others. It requires the discipline to say, I could buy that, but I choose not to. I choose to buy my freedom instead. Every time you choose to invest $1 instead of spending it on a status symbol, you are voting for long-term wealth over short-term appearances. You're paying yourself first, not the car company or the luxury brand. Master this psychological game, and you'll be on a path few ever find. We're about halfway through, and if these ideas are hitting home, if you're starting to see that money is more about psychology than spreadsheets, then I want to invite you to go deeper. This journey doesn't stop with one video. I put together a free weekly newsletter called The Wealth Mindset, where I share one actionable psychological trick or hidden financial principle every Tuesday to help you build real, lasting wealth. It's a small, consistent step to rewire your financial brain. The link is right in the description below. It's completely free, and it's the perfect way to keep this momentum going. Now, let's get to the fourth secret rule. Rule number 4. Leverage is your superpower. The average person is taught to fear debt. Stay out of debt at all costs, they say. And for high-interest consumer debt like credit cards, that is excellent advice. That kind of debt is a wealth-destroying anchor. But the wealthy have a different relationship with debt. They see it as a tool, a powerful form of leverage that, when used correctly, can dramatically accelerate wealth creation. Leverage is simply using borrowed capital to increase the potential return of an investment. It's like using a lever to lift a heavy object you couldn't possibly lift on your own. Let's talk about two common forms: financial leverage and relationship leverage. Financial leverage is what you see in real estate all the time. Let's say you buy a $500,000 property. You might put down $100,000 of your own money and borrow the other $400,000 from a bank. If that property appreciates by 10% to $550,000, your $100,000 investment has generated a $50,000 return. That's a 50% return on your cash, not 10%. You controlled a $500,000 asset with only 1/5 of the cost. The bank's money did most of the work. The rich use this principle, often called OPM, other people's money, to build their asset columns way faster than they could with their own cash alone. The second form is relationship leverage. This is about surrounding yourself with people who can elevate you. The saying, "Your network is your net worth," is a core principle for the wealthy. They actively cultivate relationships with successful, knowledgeable people. They don't see it as transactional. They see it as building a mastermind. An idea shared between two smart people can become a multi-million-dollar venture. A single introduction can open a door that would have taken years to unlock on your own. They know you can't achieve massive success in a silo. The secret is to shift your mindset from "all debt is bad" to "how can I strategically use leverage to my advantage?" Start by educating yourself on how to responsibly use good debt for income-producing assets. And just as importantly, start investing time in building relationships with people who inspire and challenge you. Your wealth will be a direct reflection of the leverage you apply, both financial and social. Rule number 5. Solve problems. Don't just work a job. Most people think about earning money in a very linear way. I will trade X hours of my time for Y dollars. This is the employee mindset. You are paid for your presence and your labor. The wealthy operate on a different axis entirely. They understand that massive wealth isn't created by trading time, but by solving problems. The bigger the problem you solve, the bigger your compensation. Think about every major fortune that's been built. It came from a solution. Jeff Bezos solved the problem of convenient access to nearly any product. Elon Musk is solving the problems of sustainable energy and space exploration. They didn't just have a job, they created a scalable solution to a massive problem. This principle, solve problems, get paid, decouples your income from the hours you work. If you create a product, a service, or a system that solves a painful, widespread problem, you can get paid thousands or even millions of times over for the work you did once. This is the essence of building equity over simply earning from labor. You don't need to be a tech billionaire to apply this. It's a mindset you can adopt right now. At your current job, stop thinking about just fulfilling your duties. Start thinking like an owner. What's the biggest problem your department faces? What is the most significant pain point for your company's customers? If you can devise and implement a solution, you create value that goes far beyond your job description. That's how you get noticed, get promoted, and earn more. Even better, look for problems outside of your job. Is there a service your community desperately needs? Is there a common frustration among a group of people that you can solve with a simple app, a piece of content, or a small business? Stop asking, "How can I earn more?" and start asking, "What problem can I solve?" The money will always follow the value you create. When you shift your focus from earning to solving, your income potential becomes limitless. Rule number 6. Treat your wealth like a business. You would never run a business without a plan, without tracking income and expenses, without a growth strategy, or without legal protection. And yet, most people run their personal financial lives with less rigor than a child's lemonade stand. The wealthy treat their personal finances with the exact same seriousness and strategic thinking as a CEO running a Fortune 500 company. They treat their wealth like a business. What does this mean in practice? First, have a clear financial plan. This isn't just a budget, it's a strategic document. It outlines your goals, like financial independence by 45, your strategy, like acquiring 2 rental properties, and your key performance indicators or KPIs, like net worth and passive income. Second, it means rigorous tracking. They know their numbers, cold. They know their net worth, their asset allocation, and how much their business is growing each quarter. They review their portfolio regularly to manage risk and stay on plan. Third, and this is a crucial step most people miss, it means focusing on protection and efficiency. The wealthy strategically use legal entities like LLCs and trusts to protect their assets from lawsuits and other liabilities, separating their personal lives from their investments. They also become students of the tax code. They don't evade taxes. They legally and ethically minimize them. They take full advantage of tax-advantaged accounts and structure their investments to be as tax-efficient as possible. This alone can be like getting a massive raise every single year. Start thinking of yourself as the CEO of You Inc. Your income is your revenue. Your savings rate is your profit margin. Your assets are your income-generating divisions. Draft a one-page business plan for your financial life. Start tracking your net worth monthly. Spend a weekend learning the basics of tax-advantaged accounts. When you bring a business mindset to your personal finances, you become an active, strategic owner of your financial destiny. Rule number 7. Your behavior is more important than your brain. The final secret is maybe the most liberating of all. Financial success is not a hard science. It's a soft skill, where how you behave is far more important than what you know. The financial industry wants you to believe that you need to be a genius with complex algorithms to succeed. That is a myth. The history of finance is filled with stories of brilliant PhDs who went broke because they had no control over their emotions. They were overconfident, greedy, or panicked at exactly the wrong time. Conversely, there are countless stories of ordinary people with no formal financial education who became incredibly wealthy through simple, consistent behavior. They lived below their means, they invested patiently over a long period, and they didn't freak out during market downturns. Financial success is more about psychology and temperament than it is about intelligence. It's about your relationship with greed and fear. It's about your ability to be patient in a world that screams for instant results. It's about your humility to admit what you don't know and to understand that luck and risk play a huge role. Recognizing the danger of overconfidence is a critical money habit. This should empower you. You don't need to be the smartest person in the room to win with money. You just need to be the most disciplined and the most patient. Building wealth is a marathon, not a sprint. It's about making reasonably good decisions consistently over a very long period of time. Focus on what you can control. You can't control the stock market or interest rates, but you can control your savings rate. You can control your own learning. You can control when you invest. And most importantly, you can control your own behavior. Master your emotions, avoiding both extreme panic and irrational exuberance, and you will have a bigger advantage than 90% of all other investors. Discipline, not genius, is the true key to the kingdom. Look, the rules of money are not what we were taught. The path to financial freedom isn't paved with meticulous budgeting and just saving. It's built on a foundation of psychological mastery. It's about redefining wealth as control over your time. It's about shifting your focus from simply saving to actively acquiring income-producing assets. It's about choosing to be wealthy over just looking rich. It's about strategically using leverage, solving problems, treating your finances like a business, and above all, understanding that your behavior is your single greatest asset. These 7 rules aren't secrets because they're guarded by some shadowy cabal. They're secrets because they run counter to our natural human instincts and the loudest cultural messages. They require a different way of thinking. They demand discipline, patience, and a deep shift in perspective. But they are completely accessible to you. Right now. You can start today. Pick one rule, the one that resonated with you the most. and focus on integrating it into your life this week. The journey of 1,000 miles begins with a single step, and you've just been handed the map. The old rulebook wasn't working for you. It's time to start playing by a new set of rules. Your rules.